Well, for more on China's efforts to open China's financial sector, we're joined by Saruhan Hatipoglu. He is the CEO of BERI and CGTN's global economics analyst. Thank you for joining us. Great to see you. You were just on the heat. Now you're with us. Tell us, for the audience, what exactly do you make of all of this and the opening up of so many restrictions?
Well, it's not a surprise because this has been discussed going back for a year, even 2 years. What surprised me is the speed with which the rhetoric is coming to open up, especially the third payment system, the mobile payments opening up to foreign competition. But we've seen the equity market, the banking and insurance industries. We have seen these announcements in November sometime. So that part isn't a surprise. But what I heard today, in addition to this, was a very prudent central bank head that said, look, we're going to do prudent monetary policy. We're going to do financial liberalization, but we're also going to contain financial excesses. So they're going to do a lot of monitoring and supervision. The good news is foreign companies that come in will be treated like equal as domestic companies in China.
Is this a big game changer?
Huge, huge. I mean, look what happens in China. The growth of this type of payment, it has been amazing. And we have Alipay that controls 53% of the market, the WeChat app Pay that controls 40% of the market. So introducing foreign competition or any kind of competition is a good thing. It's one of the things that also the monetary policymakers said today was there's this increase, a rampant increase in conglomerates, and that poses risk. Well, if you open the market for competition, that risk gets lessened a little bit.
Okay, the first UN-denominated oil futures was launched also. What does that mean for China's financial market?
That is a huge move. Now, oil demand has shifted to Asia. And China imported about 8.4 million barrels per day last year. That's the highest. United States, I think, was 7.9. So China wants to leverage this power. It wants to control prices, and it's taken measures. But a lot of people don't know this, Susan. They've been doing this with Russia since 2015. They're trading oil in yuan anyway. They're targeting Iran, Venezuela. They're courting with Saudi Arabia right now. And the idea is, how can we get to this market because we're actually dominating it? And how can we have our currency be used more internationally? Because one of the goals is still to make yuan a global currency, and this is a right step in that direction.
So how do the U.S. companies benefit from all of this, and the bond markets as well?
Bond market is a huge thing. Let's start with that. Next year, Bloomberg Barclay Global Index is going to include Chinese bonds. It's going to be about 5.5% or so, and yuan will be the fourth most used currency in there after dollar, euro, as well as the yen. So the companies, U.S. companies, the clients that I talk to, as well as big guys that want to go in there, are going to be on a wait-and-see period. They're going to see how fast or how this rhetoric is going to turn into policy. Because we have seen in the past banks not doing so well in China. We have Bank of America selling its shares. We have Goldman Sachs, Citibank selling their shares and going back because they couldn't compete. There's a corporate culture there. These large banks have created relationships with their corporate clients. It's not that easy to break in. But now that these restrictions are being eased, we're going to see slowly entering not only the U.S., but also other European companies and competing in China.
So what do you expect to come out of all of this in the coming weeks?
It all depends on what we're seeing with the tariff situation. Unfortunately, we're in a situation where we have to really wait and see what the administration is going to do and then what the response is going to be. But I can tell you this, they have announced, meaning the White House has announced a $60 billion tariff proposal last week. And that day, the stock market here lost $1.5 trillion. And I'll stop it right there. We're all interconnected. Supply chains are interconnected. We're living in a globalized world. Hopefully, White House at some point will realize that.
Yeah, and this has to factor into everything that President Trump is thinking.
Absolutely, because stock market is his baby, right? We haven't heard any tweets starting from Monday, actually, from President Trump on this. But look, at the end of the day, there are some cooler heads in the White House, even though the number has declined quite a bit. And China doesn't want a trade war. So they are talking as we speak in terms of how we can take care of this problem. They're going to come to a certain agreement. The question is when, and the question is after how many restrictions that we're going to see on trade.